Well, good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. Hold on one second here while I share my monitor with you, and we'll get the show on the road, so to speak. All right, so for those of you new to the trading room here, let me give you a really quick overview of what you're looking at. This is the Diversified trading system, and it's diversified because we're looking at the market from three different points of view. Here in the top left is the Hawk Scalper. The top right is the Falcon Swing Trader. Bottom left, I have the Eagle Trend Trader. And the bottom right is the Raptor. Now, the Raptor is actually a combination of the other three birds all into one chart. Some of our traders, our members, were trading off of laptops and whatnot, and others just wanted the simplicity of one chart. And so that was kind of the impetus to develop the Raptor, where it incorporates elements of the Hawk, the Falcon, and the Eagle all into one chart. The charts I'm looking at here are for the NASDAQ. I'm also watching gold and crude oil on my other monitor, but I would be happy to take a look at any market which is of interest to you. Sometimes people want to see what's going on with the E-mini or the Dow, or if you want to take a look at some of the grain markets or the currencies, I can certainly do that. Okay, Randy is having problem with audio. Can I just get a real quick audio check? Hello? Am I coming through? Anybody? Okay, thank you. Hold on a second here. I'm just going to let Randy know that I think it's on his end. All right. Okay. The signal generation itself all works the same way, regardless of the tool. And here, let me back up here a little bit where it's not quite so cluttered, and you can see it a little plainer. Here we go. This is all right. So the signal generation develops, we get a warning dot and an audio alert, and that tells us that the signal parameters are just starting to be met. When the signal is complete, we're going to get a triangle and a hash mark, and that tells us it's decision time for the market. Now you're going to see here on a tool like the Hawk, we've got a lot of arrows printing. We don't necessarily trade every single arrow. There's certain formations that we tend to concentrate on. And I'll go through some of these this morning. You'll see me use them. But just as a for instance, here is the first micro-macro cross signal. It occurs when the micro line, that's this thin line, crosses the macro line, and it's the first signal that prints where everything is in sync. So in other words, we have red trend lines, we have red bars, red filter, and of course a red signal. That tends to be a very high probability signal for us. Then we have another signal that we concentrate on, this one right here called the macro pullback. And it's pretty easy to identify because everything stays in sync except this micro line. This thin little micro line goes out of sync. So these are the signals that we're going to concentrate on. We're not necessarily going to be chasing every single signal. That might get to be a little bit too much anyhow. So right now here on the NASDAQ, it looks like the market's a little bit in limbo. We're printing quite a few yellow bars here on the Hawk, and the yellow bars are very neutral. They have no directional bias, and you can kind of see that anyways here just in the chart pattern where we've got the market kind of moving sideways on us. I will show you some of these trades, but we'll see if we can't get the market to loosen up a little bit first before I just start taking any old trade. Here on the Falcon Swing Trader, And again, the market's a little bit in limbo. We're generating a few more signals, random signals here than we normally would. Let me back it up again just to show you the clarity that we normally get. With the Falcon, we're really paying attention to the trend line color. So when it's green, we're going to have a buying bias. When it's red, we're going to have a sell bias. And one of the signals that you see print right here, again, they develop the same with a warning dot. It comes with an audio alert to draw your attention to this particular market. And then when the signal's complete, we get a triangle hash mark. This signal right here is what we call the trend change signal. It's essentially the first signal that is in sync after the trend line changes color. Right? So we've got the red trend line, we've got the red bars, we've got the red filter. There's our trend change signal, and there's the follow through. A little bit late, normally it develops a little bit earlier, but whatever, the market conditions were such that the signal developed a little bit late. So that's one of our higher probability signals there. Another high probability signal with the Falcon is this one right here. We call it the late filter entry signal. And again, it's easy to identify. It occurs when the filter goes out of sync and comes back into sync, but the trend line never changes color. We generate a signal, and that one also is a high probability signal. We tend to have some pretty good follow through on that one. So you can see we're working a trend change signal right now. Well, actually the signal printed back here, didn't it? So the trend line changed color. This is the first signal where everything is in sync, produced right here, and it looks like the market is trying to get to its profit objective. It's still very, very sideways. Not exactly what I would call a quality signal right out of the gate, but we'll give it a few more minutes. Let me show you what's going on here with the Eagle. The Eagle Trend Trader, we concentrate on this band for our directional bias. No, it is not an Ichimoku cloud. I know it looks like it, but it's not. Here too, one of the higher quality signals that you get with the Eagle is the trend change signal. So when your band changes direction and you produce an all in sync signal, so we've got our bars are green, our band is bullish, our ATR filter is bullish, our filter is green. That's a high quality signal. And you can see we had some exceptional follow through on that signal yesterday. Had you bought it out of the open and just held on to it, what a ride that would be. We also get these red bar buy signals. Now, when the market retreats into the hard edge, when the market is bullish, we're looking for these red bar buy signals. Now, normally there's a little bit more follow through on these, but you can see, you know, after a move like this, some price exhaustion might be expected. So this move did not have as much follow through as we would normally anticipate, but this tends to be a very high quality signal as well, this red bar buy. So it's red bars, but you're generating a buy signal. And you can always anticipate it when it encounters the hard edge. The inverse of the red bar buy is the green bar sell. That's what happens when the market is in a downtrend. So the market has changed trend here. We're generating our trend change signal right there. A little bit of a retreat into the hard edge. We produce a green bar sell, and we're trying to head lower on that. I don't think we're to our profit objective yet. If I took it on the hash mark, we're close, really close. And we're still kind of moving sideways here. The Raptor, as I mentioned before, it incorporates elements of the other three birds all into one. So you have features of the hawk, the falcon, and the eagle all working together to generate signals. And here too, that we have our higher probability signals that we tend to look for. Hard edge bounces are very common on the Raptor. So when the market encounters the hard edge of either of cloud, we look for a reaction and a bounce producing a signal. So there's a hard edge bounce. We also get, I got to go back here quite a ways to get to the trend change signal. So here's the trend change signal. We call it a cloud crossover, but it's the same idea. So when the clouds cross over, we expect the market to retreat into the clouds and then for the cloud to offer some support for that trend change. And you can see that support came right here. We generate a signal, and of course then the market just kept going higher and higher. Got another chance to get in here off of this hard edge bounce, and yet another hard edge bounce, and yet another hard edge bounce. Yesterday was an exceptional session for buying. Today, we're a lot more sideways. Still moving sideways, but until they settle in a little bit, let me show you here this tool. This is an add-on tool. I'm going to go through the add-ons here real quick. You can use these on any chart. It doesn't have to be a DTS chart. You can use it on a 5-minute chart or a tick chart, whatever. The Geiger counter is essentially a tape reader. So you've got the history of the time and sales printing right here, as well as the live time and sales right here on this dial. And then the needle kind of gives you the bias overall. Right now the needle's white, so everything is pretty neutral, as you might expect. And what we do here is a lot of times if I'm looking at taking a signal, I'll monitor the dial. If the dial pulls hard to one way and holds and holds and holds, then that tells me that the buyers or the sellers are really chewing through the orders. So if it pulls here to the sell side and holds and holds and holds, then that tells me the sellers are getting really aggressive. And I would anticipate that the market should head lower, at least short term. And if it doesn't head lower, well, then it tells me that the buyers are absorbing all the buying pressure, and we're probably going to see a pretty big move to the upside. And of course, vice versa. If we see the dial pull and hold and hold and hold, oh, that's pretty good. It's holding, it's holding, it's holding. So the buyers are just chewing through those orders. Let's follow this here for a little bit and see if we don't get a little bit of an uptick over the next bar or two. Oh, see, they're still pulling and trying to hold. They're holding it. They're holding it. And of course, if they fail to rally, then we can anticipate probably a pretty big move lower. They're trying to push it higher. The Geiger counter is very useful for, like I say, initiating orders. Okay, there you go. We're getting a little bit of an uptick now. If we're getting a signal and I'm thinking about, well, is there enough buying pressure to take the buy signal or enough selling pressure to take the sell signal? It's a very useful tool for that. And it's also a useful tool for judging whether or not you want to stay in the trade. All right, so the signal failed. We're really not getting that much follow through on the buy side. You see our needle is green. We saw there was a lot of buying pressure. We're getting a warning dot here. Let's see if we come back with a sell signal. And I'll pop in a short order to short the market. Yeah, see, the buyers are trying to get through those orders. We'll see if the sellers absorb it all, though. So the other thing that I was mentioning the Geiger counter is good for is if you are in a trade and you want to judge, is it time to leave? Is the buying pressure or selling pressure becoming too much for me? That's a very helpful tool in that respect. That was actually how the Geiger counter got started. One of our members wrote Adam and said, "Hey Adam, can you give me a tool to tell me when I should get out of an existing trade. Well, that was how the Geiger counter was born. W. Golden is asking, what's the needle on the live bar? Well, W, the needle is kind of an aggregate of the bias. So you can see we've had a lot of buying pressure here. The needle has gone from white to green, so we actually have a slightly bullish bias according to the Geiger counter. But it seems as though the buyers are having a little hard time following through. We keep generating red sell dots. No signal just yet. Okay, here comes another one. There's the sell signal. All right, so we've engaged. We've got the triangle, the hash mark. I hit the sell market button. The tool I'm using here is the Trailblazer. I'll get into that in a little bit. Let me get a stop in play here. With the Trailblazer and the Trade Manager, which you're going to see, we actually have 16 different stop strategies that we can choose from. And they're all customizable. And so now we're down here trading at the low. See how the buyers are trying to defend the low? Did you see the Geiger counter pull hard over? Look at that. They're really trying to get through there. And let's see if the sellers take them out. What time is it? Oh, we still got some time before the top of the hour. A lot of times we'll see the market make a significant high or low at the top of the hour. So it almost looks as though they're going to try to make a run and put in a low. If we can break out through this 43.21 area, we're going to start engaging some of these buyers' exit orders, and that should spur the market lower. Okay, so what I'm looking for now is I'm looking for the sellers to come back into the market. Let me just pull this above the hard edge, just because that's where the market may tend to find some support, or resistance in this case. And once the sellers re-engage the market, oh, come on, give me more than one bar. Then I'll probably go with a more aggressive stop strategy, maybe something like parabolics or even the ATR. And just try to run it down with them if they give me a break here. All right, so we're starting to see this bar here with this long wick to it. That's probably as good a bar as any to put my stop above. So I'll roll my stop there, and I'll go with the, sure, let's go with the parabolics. Now the nice thing about the Geiger counter, the Trailblazer here, and with these stop strategies, these blue dots that you see printing here, these are the stop strategies. You're going to see the Trailblazer take my stop from where I have it here and roll it according to these blue dots. So we actually need to see a trade down here a little bit so we can print a new blue dot. Come on down. There we go. All right, so did you see it took it from up here, it moved it to here, and now if prices continue lower, it will continue to roll the stops automatically. I have an auto break even in play also, so that if we get down below this 43.21 area, it will automatically take my stops regardless of where they are and take them to break even plus one tick. And I can set that to be more or less as well if I want to protect more or less profit. All right, they're buyers digging in here again at the 43.21 area. Look at that. They're pulling over and holding, really, really trying to defend that 43.21 zone. If this lets go, we're going to see a move to the downside for sure. Paco says the Geiger counter makes him nervous. It moves back and forth so much. Yeah, when you're watching the Geiger counter, Paco, you really got to kind of step back and not microanalyze it. You see, what I'm looking for is I'm watching the dial, and did you see how the dial is here now to the short side and it's holding? When it's snapping back and forth like that, it's telling you the market is in balance. But see, now I'm going to watch and I'm going to see, can the sellers pull it over and hold it? No. They pulled it over, but they didn't hold it. If they pull it over and hold and hold and hold for like 3 or 4 seconds, then that tells me there is considerable buying pressure there, right? That the sellers can't even knock it to the sell side for a second. Then that's what you're looking for. That's what's going to give you your kind of your clue, if you will. All right, so right now we're still at break even with our, I'm using the parabolic stops. So we've taken profit on one contract, and I'm just going to show you here how the parabolics, or whatever strategy I would choose, how the Trailblazer is going to roll the stops down for you automatically. Now the Trade Manager does this as well. The difference between the Trailblazer, the tool I happen to have here on the Raptor, and the Trade Manager is the Trade Manager has a built-in risk component, which I'll show you also. See, we can even bring it down here so I don't have to look too far. So you see how the buyers are starting to pull it over and they're holding? That could be a sign that maybe support is in. I'm going to let the Trailblazer still manage this trade, but you know, we've got $150 in open profit there on our second contract. See how they're pulling it and holding it over. I might choose to, at this point, you know, maybe bring my stop down above the high. Just give it that bar. If the sellers can't recover it, then go ahead, stop me out. And that's kind of a clue. That's kind of how you can use your Geiger counter. Like I said, though, I'll just let the Trailblazer here continue with the trade. The nice thing about using the Trailblazer and the Trade Manager and this auto trade feature or auto trade management feature is it actually frees you up to look at other markets. It was a very important function when I was doing the profit run last year because it enabled me to place a trade, set my stop strategy, and then go find another market to trade. Because we really don't need to watch this now. We can look for opportunities elsewhere. Way to go, Tony. Tony picked up 12 ticks on the NQ when it broke 43.21. Well done. Oh, on 3 contracts. Way to go. That makes it worthwhile. So we're still humming and hawing here. This is obviously going to be a little bit of a tug of war type of bar. We're also using the dynamic equivolume bars, which is another add-on. It's not unique to the DTS system. You'll notice that some of these bars are wider and some are narrower. The equivolume bars, the dynamic equivolume bars, will work on any chart style, unlike regular equivolume bars, but they show you the volume associated with each bar. So the thin bars have less volume, the thick bars have more volume. And contrary to what you may think, the thin bars actually show you when the market is trending. It's the thick bars that you need to worry about because that's where all the struggle is between the buyers and sellers. But the thin bars, if you have thin bars, you can be pretty sure that the price will continue in the direction that it's going because it's not receiving a whole lot of resistance. So here we had a couple of thick bars where the buyers and sellers really were duking it out, and it looks as though the sellers won that, and now we've got some thin bars and the market's continuing lower. Let's go to the support and resistance suite and see where our next support line will be. So the support and resistance suite, this is also an add-on. Again, it can be used on any chart. We've got 21 support and resistance lines, and no, they're not pivot points, and no, they are not Fibonacci levels. So we've got the gold line here, that's the median line. Then above it, we have primary resistance and primary support. These three tend to be the most influential lines for the session. If the market is below here, it tends to remain bearish. If it is above, it tends to remain bullish. And then we get our secondary support and resistance lines where we anticipate the market to find support and resistance. So it looks as though I heard the order engage. We probably got stopped on that little hiccup there. But it looks like if the NQ stays below the primary support, 42.83 3/4, 42.84 is a likely stop on the way down. All right, so there was our Raptor trade, and it worked out pretty well actually. Nice smooth progression. With the mean Renko bars, that's the chart style that we're using for the DTS system. It's very easy to interpret the price action. Like it's very plain to see, the lower highs. It's very plain to see where the support is. This is also an add-on, by the way. You can just get the mean Renko bars separately if you choose. As a type of information you don't usually get in a time-based chart or a tick-based chart. So while the Raptor was declining there, we also had comparable signals here. We had a hard edge bounce on the Eagle, kind of came in sync right about here. Let's see if we've hit our profit objective on that one. Yeah, just hit our high probability target. Now we're getting a little bit of a reversal, so a nice signal on the Eagle as well. And no doubt we had a few signals here on the scalper. It was really a little bit of a mess with the yellow bars through here. Here's our first micro-macro cross signal. Took a little bit of heat on it, but it eventually tailed off. Yeah, I wasn't expecting that many yellow bars. We did get a green bar sell. That's another one of our high probability signals. So we had a couple of chances to get in here on the hawk scalper. And now we're back into yellow bars, so it seems like there may not be as much follow through on that downward breakout as we had hoped for. We'll see, it's still early. All right, so where we are right now, probably going to see the market retrace into the hard edge here on the Eagle and possibly on the Raptor as well. We're working on a possible trend change here on the Falcon. You see our trend line has started to change color. So we just, I'm looking at gold and crude oil. Not much going on with either of those. Tony is asking, question when you have time. Sure, always got time for a question. What are the green lines that you have, the high-low lines, starting after the first 30 minutes? So these lines that you see here, this is an indicator from Indicator Warehouse. It's called the initial balance lines. And I use them to highlight the first half hour of trading. It's just because the first half hour of trading tends to be when the institutional traders get busiest. If you ever follow the volume on a chart, you'll notice that that first half hour of trading usually has the most volume of the day. So that's what that's about. So where are we now? We're at the top of the hour, so this is going to be a pretty significant low down here at 43.10, and this was as high as the market could muster today, just shy of 43.33. So those are going to tend to offer some sort of influence as the day goes on. All right, we're working a first micro-macro cross signal here, as well as a trend change signal. I'll tell you the thing I don't like about this particular signal is we haven't seen a real good test of the extreme. What's that, you say? Never heard of that? Well, a test of the extreme is simply a retest and a failure, right? Once we see the market retest and fail and come back and print a signal, that's going to be a higher probability setup for us. But I don't have that yet. So if I take this first micro macro cross and it's a high probability signal, I always tell people in the room, I almost take this signal without exception. I'm going to have to cover the trade fairly deep. All right, now we're into a macro pullback scenario because our micro trend line has changed color. You see that? It's red. And the tool I'm using here, this is the trade manager. You see, it has the risk component built in. I'm limiting my risk to 2% regardless of where I place my stop loss order. It's always going to contain my risk to 2% of my capital. Very important concept. Cannot overemphasize how important that is. All right, they seem to be holding. I'm going to park the order, and if this bar finishes, there we go. We've got the hash mark, the triangle. We've got our scalp signal just in here for a onesie, and you can see I've got my stops pretty deep because I'm concerned the market may try to retrace on me some more. After all, we are more or less in a downtrend this morning. Come on, get up there, get that break-even trigger. So let's see, what will I go with? We'll go with the swing low maybe. We'll offset it a few ticks. And we'll accept that, enable it. All right, we'll go with that stop. Now my stops will hold here until I either hit break even or I change my stop strategy. Come on, get up there. Very reluctant this morning to do anything. Come on, you guys, get up there. Crude oil also really stuck sideways here at the moment. All right, so they managed to get up there, tag the break even and our profit objective. So a nice little quick scalp out of that. And I should have actually put the Falcon trade on as well. So we had our trend change signal here on the Falcon. See the trend line changed color. We get this little traditional up, down, up pattern. There's the signal right there. And it looks like we would have just hit our profit target on that one as well. So hooray for us. They're trying. They're trying hard. All right, so let's cancel that. So we're into the hard edge. As I mentioned, we normally anticipate some sort of reaction when we get to the hard edge. Right now, things still looking pretty bullish. We had a soft edge buy here on the Raptor, right here. The soft edge buy, you really got to pay attention to on the Raptor because you're going to get this quick little test of the low, the test of the extreme. Then it's going to come back and it's going to flash you a buy signal. Now, these tend to be, again, high probability signals, but you really got to be alert to watch and make sure you get that little test of the extreme. And then right away, I start looking for that possible soft edge buy. And there tends to be good follow through on that. We expect it to at least go to the hard edge, but very often it'll go much further than that, as it looks as though we may try to challenge this morning's high, maybe get up to that 43.32 area. Wouldn't that be nice? And see, one of the hazards of moderating a trading room is sometimes you miss signals when you're pointing other things out. A nice macro pullback signal here on the hawk. Oh, well, sorry, we actually took that one, didn't we? Confusing myself here. Yes, we were waiting for the first micro-macro cross. It developed into a macro pullback, and we did our little scalp on that. The trade forecaster, this is another add-on tool down here. There we go. The trade forecaster says we're currently in swing mode, but in about 12 minutes time, we're going to be moving into scalp mode. Yikes! Can things get more choppy? Say it isn't so. All right, well, we're into that hard edge. The market moving a little bit slower this morning. Tony's asking, Eric, do you know how to refresh the account panel on the trade manager so it agrees with the account shown in the account performance in the control center? No, not really. But the only thing I can think of is to reload the Ninja script. That will cancel the strategy and reboot it. But short of that, I'm at a little bit of a loss, I'm afraid. Oh, darn, I was just about to point out the second macro pullback signal here, and it jumped away on me. What time is it? It's keeping an eye on the clock, too. We're going to take a look at crude oil. Well, here, I'll bring it over right now. Here's crude oil on the Falcon swing trader. And what we do on with crude oil, when their inventory report comes out on Wednesdays, is that very often we will bracket the highs and the lows and just kind of trade it like a range. Ideally, I want to see crude oil trading somewhere back in the middle of the range. Right now, it actually is looking a little bit more bullish. But we'll come back to that. We'll come back to that in about 10 or 15 minutes. And we'll look at setting up a trade. I'll show you how the OCO function works. That's one cancels other. All right, come on, boys and girls. Oh, we're getting a cloud crossover here on the Raptor. So the clouds have crossed over. And now we're looking for prices to retreat back into the cloud and perhaps produce a signal. Here too, though, we haven't seen a real big retest of the lows, have we? Okay, so there's our signal. Now, I'll mention, folks, this is a little riskier. I'll point it out to you because we're in the demo room. But whenever you're trading near the top end of a trading range, the better strategy is usually to let the market break out and then retest and then look for the subsequent buy signal. All right, so it's a little riskier buying into the top end of a trading range than letting it break out and retest. But hey, we're in a demo room, so I can show you this sort of stuff. All right, let me enable another stop strategy. Maybe we'll do the ATR this time, and I'll dial it back a little bit. So there's our strategy, there's our stops. I'm going to adjust it a little bit more so it stays below that hard edge. I don't want to see the market retreat into this hard edge only to stop me out prematurely. Remember, your stop loss is only a loss if it gets hit. It's not a stop loss otherwise. It's a safety net. Big difference. And I don't know about you, but there's few things more annoying to me in trading than being right about a trade and getting tagged, by a tick or two. Oh, and then watch the market run away without you? That's crazy. Okay, so here we are at the top end. I pulled the Geiger counter over so that we can monitor it. What we're looking for is we're looking for the buyers to take total control here. We want to see them pull. There we go. Hold it, hold it, hold it. Oh, that's a thing of beauty. Now, providing the sellers don't do the same thing to the downside, we should actually see some follow through here on the buy side. Come on, they got to come back though. If they can't maintain control, then they're going to lose it, and we'll have to get in there with a tighter stop. There we go. Come on. So now they're dead neutral on the Geiger counter. And you see how the sellers are pulling and holding? That's not what we want to see. We want to see the buyers come back. See here on the histogram, we're getting this big sell spike. That's not what we want to see. The sellers are piling it on here. Let's see if the buyers can absorb it. Now, again, this is a type of situation where perhaps using the Geiger counter, you can see the sellers are becoming more aggressive. Maybe you want to bring in your stop a little bit tighter. Maybe you just want to bring it in below the lows here and say, oh, forget it. If they can't hold it, then take me out and I'll take the next signal. We're going to stay with it a little bit here. But you can see, look at how the sellers are just pouring it on these highs, this whole 42, 33, 32, 3/4, 33 area. They're just laying into them. And still chewing through those orders. What I'm on the lookout for now is for the buyers to come back. Show me where the buyers are, and then I'll start to roll my stops. Maybe they'll find some support here near the trend line. Yeah, you see they're starting to come back a little bit. The waffling back and forth doesn't mean much, but again, when they pull over and they hold, then that's significant. They seem to be fairly evenly balanced at this point, so I'm thinking the whole 43.30 line looking to be kind of influential. All right, so here we go. Now we got the buyers chewing through the orders. We've got this little higher swing high. I'll adjust my stop strategy again, get a little bit more aggressive on it. I could even roll my stop just below here if I choose. Kind of the last chance for the buyers, really. If they don't pull it together from here, the market very likely will head lower. You see, we've got this little lower high relative to this one right here. So the seller's trying to make a comeback now, and the buyers have got to step in here, or it's going to be game over for the bulls. Oh yes, W's asking the red-green bar that's here around the current bar. This is part of the Geiger counter. Sorry, I forgot to mention that. This is called the trade indicator. It's a very short-term bias. It just tells you very short-term that this particular bar, there's actually a lot of bearish bias on the bar. Okay, so the buyer's starting to move it up. I'm going to go with my bar high-low strategy now. Now, a lot of times I don't change my strategy this often, but in the demo room, I want to show you as many things as I can. So with the bar high-low, it's actually going to roll the stops very aggressively. It's one of the most aggressive stop strategies in the assortment. And if we can break out above the highs here, you're going to see the Trailblazer start to roll it bar for bar. Well, at least 2 bars back. I'm 2 bars back, 2 ticks off of the low. That's how I have it set up. So long as prices are advancing, it will continue to roll the stops, and it will take us out on the first sign of weakness. And they're really having a tough time with these highs here. 42.33 just loading up. If you're looking for a trade to take it above 43.34. Okay, so you saw the stop strategy here. The bar high low rolled us up from here to here. We got tapped on this little bit of a reversal. But yeah, if we come back here and we produce another signal buying above 43.34, wow. If we can see the market breach that level, I think we're going to see some pretty serious follow through here today. All right. So there we go. Not a bad little trade. Again, we're into the hard edge. We're kind of generating a little bit of a reaction here on the Eagle. Getting a red bar buy signal now on the Hawk. This is one of the few counter trend signals on the Hawk, or actually the only counter trend signal. We can either look to buy it or we can look to short the failure. Or we can just use it as an early warning that if the trend is changing, we're going to get a trend change signal. Our first micro macro cross lower. So you don't necessarily need to take it, but it is a counter trend available to you if you're looking to get in a little bit earlier. Market really struggling for some direction this morning. We had a downward leg, and now we had an upward leg. Now they're just kind of waffling again. Kind of working on the first micro macro cross signal there, not complete just yet. We did get a trend change here on the Falcon. Sure, here, let's demo the first micro macro cross signal right here. We'll cover up there. So the first micro macro cross again is the first signal where everything is in sync. So we just produced the signal right here. I might be cutting this a little bit fine because the warning dot actually produced on a gray macro line. But the trend lines are in sync, the bars are in sync, the filter is in sync. I'm covering above the high, again, for the reason that it's counter trend. Markets don't turn on a dime. We're currently in an uptrend. Here's the down. There is a chance we could see the market try to retest the highs before reversing and heading lower. Well, I don't want to get tagged on this retest part. This is the beauty of the trade manager, is I can put my stops back here. I'm not risking any more by putting my stops back there than if I put my stops real tight. Don't believe me? Well, we'll let this trade finish out and I will show it to you. By containing my risk to a certain percentage, I never risk more than I can afford to lose, and it gives me the flexibility of actually placing my stops at appropriate levels. Okay, a few minutes here before the crude inventory report, so I'm just going to let this one simmer, and we're going to move now to crude oil, which does not seem to have done much more in the way of ranging. This is going to be a tough one to try to set a range on. Normally what I like to do is I like to use the OCO function, and I'll place a buy order and I'll place a sell order. Now when you use the OCO function, you need to remember these orders are live the moment you put them on your chart. And what you'll find with the OCO function is that if one side fills, it will automatically cancel the other side, which is the whole point of the OCO. What we might do today, however, trading friend of mine handles these reports a little bit differently. What he does is he lets the report hit the floor, let that initial flurry subside, and then he'll bracket the range that he sees and let the market engage his order that way. So since we don't have a well-defined range right now, I think we may end up doing that today. So we'll give them a couple more minutes here on crude oil as we get closer to the inventory. And the market has fallen off and found our profit objective after a little bit of work. Whew, hard work today. So the Falcon also producing a sell signal. It actually produced it a little bit earlier. So here's our trend change signal on the Falcon right here. It's the first signal where everything is in sync. And we're working on getting to our profit target there as well. Nice swing signal here to the upside. Good follow through. A little bit choppy out of the open, but we had a nice sell signal there also. So the Falcon performing pretty well today also. All right, crude oil is a little bit of a mystery. Doesn't look like much going on with the NASDAQ at the moment, so we'll bring crude oil over again. And I'm using the Falcon here. You can use any of them really. The Hawk, the Eagle, the Raptor, whichever one you like. All right, so inventory report out in about a minute's time. Oh, I should put the Geiger counter on here just so we can see the order flow. Where'd you go, Geiger counter? There we are. Oops, sorry. All right, so here's the inventory report out. And you can just tell from the market activity. Actually, it's kind of quiet. The numbers are kind of small. Normally, we see larger lots go through here. There we go. We're starting to get some volume now. Or actually, it's not 7:30 yet. 10:30 in the east. This is pre-market. There we go. There's the inventory report. Okay, so it looks like we're going to have a top up here. So I'll use my OCO function. We're going to put a buy order in. I'll use the support and resistance line to buy above. And they're still trickling lower here. We'll see where they give us an uptick. Is that going to be it? Come on, there we go. Okay, so I'm going to use the primary support to short below. I could short below here. There'd be nothing wrong with that. Well, actually, why don't I do that? We're going to show the OCO function, so I might as well. Also getting a bit of a trend change signal here, you'll notice. Trend line changed color, right? We have our down, we have our up, single bar up, we have our down, produce our sell signal. Now with the OCO function, if we engage here, you're going to see the buy order cancel, and we should have our stop auto enabled. Only thing you don't get with the OCO function is a preset profit target. You're going to have to manually set your profit objective. Oops, what happened there? Let's try that again. Okay, so we've got a short order in play. We've got the auto break even in play. We're trailing our stop according to our stop strategy. And, you know, it's crude oil. You could even disengage the break even if you wanted to see if you could run it out a little bit. So now we're below the primary support. Next stop, 33.39, approximately. So I don't know what it's like in your part of the world, but yesterday prices at the pumps jumped 8 cents a liter. That'd be about 40 cents a gallon. So we'll see. Crude oil is falling again, whether they're going to lower the prices at the pumps. What are the odds of that, you think? Come on down. All right, so we're looking for the sellers to kind of take control of the market here again. Oops. We should see some selling here, at which point I think I'm going to get a little bit more aggressive with my stop again. Maybe we'll try parabolics. No, parabolics are too far away. Come on, crude, you owe me one more move lower. Oh, don't you dare. They're going to tap me here in a second, though. See how the Geiger counter keeps pulling over to the buy side? Get away from there. No, the buyers are going to be just a little bit too strong for us, I think. Too much pressure on the buy side. Sometimes it helps if you pull it down with your mouse, in case you didn't know that. Well, we know our stop is in the right spot, if nothing else. If it fails at this point, then it's very likely going to continue to rally. And if the sellers do, by some small miracle, regain control of the market, well, then we can probably anticipate it to at least retest the lows, which is why I'm going to get more aggressive with my stop. In fact, we'll go with the bar high-low right now. So I got the bar high-low strategy in play. And you can see this bar very, very conflicted. As is shown on the Geiger counter as well. You see how it's waffling back and forth here. Buyers have control for a minute, sellers have control for a minute. The buyers, the sellers, neither side is getting the upper hand here. Like I say, very conflicted. Okay, so we're going to be 2 bars back, 2 ticks off. And I could be more aggressive. I could even just go 1 bar back. As we get closer to this primary support, actually, I'm going to be a chicken. There we go. 1 bar. That's all you get. So now the stop strategy is automatically going to roll it bar for bar lower. If there's even a little bit of a hiccup here, it's going to take us out of the trade. Here we go. We're getting back to the lows where we may see some sort of reaction, but we're pretty much at break even now. Break even minus 2 ticks. Oh, stinkers. All right, I have to make a note in my trading journal now and see whether or not that was a good call or not. Not looking that way right now, is it? Okay, well, that's how the OCO function works anyhow. There you go. We'll put that away. All right, so the NQ still a little conflicted. A nice little first micro macro cross there. That's the one we took advantage of. Also came back with a macro pullback signal and a green bar sell. So you had a couple opportunities here to short. Here comes yet another first micro macro cross signal. Again, we're right in the bottom end of this trading range. A little bit more difficult of a signal to take, and one that you're going to want to cover the trade much higher. Probably a good signal for me to show you this whole concept of your risk control. So what most people try to do is, in an effort to keep their risk exposure small, is they'll jam in their stops really, really tight, and they'll end up with something like this. Problem with something like that is if the market brings you in and goes against you a bar or two, it's going to stop you out for a loss. Now notice what my risk amount is here. Now it's $330. That's my risk amount. That's 2% of my account. What happens though if I place my stop maybe right there? Oh, look, the risk amount is about the same, still around $330. What if I place my stop a little bit higher still? What if I put it right there? Oh, it's still about $300. What if I place my stop way up here? Oh, it's still around $300. But did you notice what changes? The risk stays constant, but your position size changes, right? I go from 6 contracts with my ultra tight setup to 3 to 2 to 1. Now, which of those trades do you think has the highest probability of success? Now, we're not talking risk-reward ratios here or anything of that nature. We are talking which trade has the highest probability of success. Well, the one with the bigger stop, don't you think? It's more likely that the market will hit my profit target before it hits my stop loss. Right? The market only has to move a little ways to hit my profit target. It has to move a great big ways to hit my stop loss. And yet most traders jam their stops in so tight that they end up strangling their trade before the trade even has a chance. Now with the DTS system, it's very good at picking up initial momentum, but you've all been, or not you, we've all been in those trades where you get tagged on a little bit of a reversal only to see the market continue lower without you. So the correct way for you to manage your stops is to control your risk and then adjust your position size accordingly. This allows you to place a reasonable risk or a reasonable stop on the trade. Right? If I place my stop right here, I have a reasonable chance that this trade's going to work out. And I still get a decent profit on it. So even though the risk reward is lopsided, and a lot of people can't figure that out, this is actually the easier way to make money. You're looking for the market to hit your high probability targets, and you don't need to do that very often. If you take, even here on the Hawk Scalper, if you're in a position where you can take 2 or 3 contracts at a time and make $100 or $150 profit on each high probability signal, you don't need to take that many signals. Look today. And today was not an ideal day. We had a lot of choppiness today. There's a first micro macro cross. There's the first micro macro cross. I won't even look at the macro pullback signals or the green bar sells or any of those. So there's 2 signals. There's, well, this is technically our first micro macro cross also. It's overlapping with a macro pullback. There's 3 signals. There's 4 signals. There's 5 signals. This one gave you a little bit of heat, but again, as long as you didn't jam your stop in right here, you would have rode out that little bit of a swing. Did this one hit its profit target? That one's right out of the open. No, it just came short of the profit target, but you would have hit the break-even trigger. And this one is pre-open. So we have 4 signals, all of which were profitable, 1 at break-even, 5 signals, 1 at break-even. And even if you took $100 on each of those trades, if you made $100 profit on each, that's $400 morning. And we've only been trading for a little more than an hour. That's not a bad day. And if you're in a position where you can take 3 contracts, if your account is large enough that you can take 3 contracts, that's a $600 day. And that's on 1 signal, 1 high probability signal. Like I said, that's not even including the macro pullbacks or some of the other signals that we capitalize on. And that's just one of the tools. So that's actually the way that you make money trading. It's not by trading more frequently, but it's by correctly capitalizing on signals and then, trading as much capital as you can afford, but never risking more than you can afford to lose. So if the trade does go poorly, if the trade does go south on you, then okay, you've incurred a loss, but the loss is small enough, it's only 2% of your capital. It's not going to wipe you out. It's not like you just took a 50% hit on your account. I joke in the room that I've met 2 traders who have blown through a $20,000 account on a single session. $20,000 account in a single session. I have no idea how you can do that. But how would you like to come home to your wife or husband and hi honey, oh, how was your day? Oh, well, I blew through a $20,000 account today. Yeah, you'd be spending some time on the sofa after that. All right, well, I've pretty much shown you all the features that we have here. Ryman is asking, on your trade manager, is your setting true or false? Well, here, I'll show you. It's true when it's enabled. See, here it's true. If you want to make changes to it, you need to go to the Enable tab. You need to click False and then Apply. And now you can make changes to it. You can change your break-even parameters. You can change your default stop or any of the other settings. Then when you have it set the way you want, I would suggest that you type a name into it here that you want to save it as. See, I've already saved it as Falcon, so it's easier to load. Then when everything is to your liking, go back here to your Enable tab and turn it back on. Go to True. You have to remember to click Apply. And there you go. You're all set. Well, thanks, Alejandro. Alejandro says, you're the best. Well, no. I'm just trying to help out where I can. All right, you guys. If there's no other questions, we might close up the trading room a little bit early here. It looks like the market's content to go kind of sideways-ish. I'm actually more bearish today. Now that we've had the buyers try to run it up here, we'll look at the eagle. It'll be a little bit more evident. We've had the buyers try to run it up. Oh, sorry, that's the overnight. Here we go. Tried to run it up, fail. Here we are. Now we've broken down through the lows. We're getting our little retest that I mentioned. If we come out of this and we produce a signal down here somewhere, it probably would be worth taking. I would consider that. But, you know, right now, maybe the best that the sellers can do, given yesterday's strong uptrend, is just get the market into a trading range. So be careful at the bottom end of these ranges here. It could be problematic. All right, you guys, DTS owners, I will see you in the trading room again tomorrow morning. Thank you, everyone, for your attendance here today. And I hope you'll join us again next Wednesday. All right, we'll talk to you guys later. Bye for now.